Hey guys, welcome to the channel. So if you're new here, this is just me following along with my dividend portfolio that I've started in a TFSA at the start of the year. So we are up 803 for the year, 11% in the past year. And we have a big announcement from the banks, and I sold a stock and bought a stock. So if you want to follow along with the journey, just hit the like button, subscribe, and comment in the video, and share. So the first big piece of news would be that the Canadian banks are officially allowed to raise their dividends. The OSFI, the governing body over the banks, has allowed the banks to not only raise dividends but buy back shares as well. So this is huge news for Canadians. Definitely going to be a great time to pick up your Canadian banks as they're going to finally increase their dividends. We've been waiting so long for this. And the stock that I sold out of was Alimentation Couche-Tard. So if you're not familiar with this one, it's going to be a convenience store chain that's all over North America and Europe. So you'll know these as Circle K's in Canada and the States with Esso stations. And in Europe, they have Ingo, I believe. I've never seen them because I've never been in Europe, but they have 14,000 convenience stores all over the world, ton of gas stations. So a very stable, essential company that you can really rely on. It's a good defensive pick. The reason I sold it was just because I have a higher conviction stock that I really want to get in on while the prices are down, while I think it's a better value with more potential upside than Alimentation Couche-Tard, just because it doesn't pay much of a dividend. It's only 35 cents a share, and it won't offer you insane growth. I think it's going to give you, slow and steady growth, but I think if you're not going to get much of a dividend income from it, and it's not going to give you insane growth, I might as well just pick one or the other. Either pick the income or pick the growth, and I went with growth. And the stock that I decided to double down on is Alibaba. So we sold out of Alimentation Couche-Tard. I went out of the slow and steady defensive stock into the fast-growing company that has a lot of potential and is basically the Chinese Amazon. As I've mentioned in previous videos, they are just growing larger and larger each and every year, and the stock price is it's just laughable. You can't really find this kind of value anywhere, and if people are just going to be, dismissive of this company just because it's based out of China, all the better. I'm going to get this at a lower price. And if it's going to stay down, I'll keep acquiring more shares of this company just because they're ahead on a technological basis. They just have so much automation in their factories. They have higher profit margins than Amazon already. They have Alibaba Cloud. They have cloud services kind of like Amazon AWS. So they're just doing things faster and growing faster than Amazon. And for this to be trading at a multiple of like 20, that's just way too low. A multiple of 20 should be going for a slow growing company. This is a fast growing company, and it's just trading at such a low earnings multiple. So that's why I went into it even more, and I will probably continue to do so. I'm hoping the price goes down even lower, just because I love getting things at an even better value, and the price going down doesn't bother me because I can see with the earnings reports that this business is growing each and every quarter, becoming larger and more dominant in the marketplace. And here's the updated portfolio. So we bought our second share of Alibaba from the sale of Alimentation Couche-Tard. So now it's currently 5% of our portfolio. So pretty happy with this. I definitely have more conviction with this pick than a slower growing opportunity that I don't see outperforming Alibaba in the long term. So I really just want to concentrate my portfolio a little bit more. I just feel like I have a few too many holdings, and I really need to commit more to picks that I'm very, very excited about and just believe in more. We also bought more into the Canadian banks, of course, a little bit of fractional. I'm gonna drop fractional shares into these. If they drop a little bit, I'll go a little bit more aggressive. But these are just positions I'm continuing to reinvest the dividends in. each and every quarter, and this is just a position that I'm planning to hold forever. These are not positions I'm going to be selling. So these two are here to stay. And we bought one more share of Suncor. And another piece of great news is that TELUS actually raised their dividend again. I believe it's by 5.2%. So I've owned this stock less than a year, and they raised the dividends earlier in the year, and they raised it again just recently. So they've increased their dividends twice in 1 year. That's very, very good dividend growth. So I'm actually going to be looking to pick up more shares of TELUS very soon. And I purchased all these stocks on Wealthsimple Trade. So they have commission-free trades on Canadian listed stocks and ETFs. There are conversion fees for American stocks, but frankly, if you're buying a very small amount, you're still doing better than paying, $10 per trade for an American stock when you can just pay a few dollars to, invest in an American company that would otherwise be inaccessible to you. So yeah, feel free to join my link in the description below, and you can get the value of 2 free stocks, and you can get a nice start on your own investment portfolio, your own investment journey. Have a great day.